This is ShadowQuant Forex Edition, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, August 26, 2026, and this is the New York pre-market. Now, let's get into it. The Fear and Greed Index is sitting at a deeply fearful 14 out of 100, yet the US dollar index holds a net bullish position of 4,438 contracts. It is a market where extreme caution is colliding with structural dollar strength, and safe haven flows are currently dictating the price action in the pre-market. We are looking at a session defined by Jackson Hole caution and data-driven volatility. Let's look at the calendar. Today, Wednesday, August 26th, brings two high-impact U.S. data releases. First, the durable goods orders report, which just came in at 1.1%, beating the 0.5% expectation. Second, the core PCE price index, which held steady at 3.3% year-over-year, exactly in line with forecasts. These releases are the primary catalysts driving the current risk-off rotation and the safe haven bid in the U.S. dollar and gold. The broader market is trapped in a structural contradiction. U.S. economic data is showing resilience, durable goods beat, core PCE is sticky at 3.3%, yet the sentiment index is flashing extreme fear at 14 out of 100. This has forced capital into the U.S. dollar and gold, while risk-sensitive currencies like the euro and the Canadian dollar are under pressure. Let's see how the data is actually moving the books. We are seeing a clear headline-driven volatility in the pre-market. First, U.S. July durable goods orders came in at 1.1% versus 0.5% expected. This beat is directly fueling the dollar bid. Second, UK retail sector data shows sharp sales decline according to the CBI survey, adding pressure to the pound. And third, oil prices are sinking as expectations for an imminent US-Iran deal increase, which is directly impacting the Canadian dollar and risk sentiment. Pulse. How does the durable goods beat interact with that fearful sentiment? It creates a hawkish bias that overrides the fear. The 1.1% beat on durable goods, combined with core PCE holding at 3.3%, confirms that inflation is sticky, and the Fed funds rate at 3.63% isn't moving down soon. This data validates the safe haven bid in the dollar, even though the Fear and Greed Index is at 14 out of 100. Traders are buying the dollar, because the data says rates stay higher for longer. SPECTER, you're tracking the VIX at 15.85. Does this data beat actually confirm the fear, or is there a complacency angle here?
It's a complacency angle. The VIX is compressed in a 14.77 to 16.14 range, which contradicts the 14 out of 100 fear score. We have headline fear but low volatility. This suggests the risk-off trade is priced in. If the ISM data later today misses, that compressed VIX will expand and the current safe haven flows will reverse instantly. The market is fragile.
Moving to our first deep dive, euro-dollar. It is trading at 1.1664, down 0.9%, sitting right near its 5-day low of 1.16511. Grid, what is the technical structure telling us at these levels?
Price is compressed within a tight 5-day range. Resistance is at the 5-day high of 1.17117, and support is at the 5-day low of 1.16511. We are currently 0.0013 points away from that support. The volume is low, which means this consolidation is static. We are waiting for breakout from these boundaries, but right now the chart shows a lack of bullish conviction.
And the positioning explains why. Leveraged funds are net short euro by 57,716 contracts. That is an extreme bearish level, but here is the nuance. Asset managers are actually net long euro by 237,426 contracts. The smart money is accumulating shorts, while speculators are piling into the downside. If euro-dollar breaks that 1.16511 support, we aren't looking at a standard bounce. We are looking at a liquidity cascade given that crowded short positioning.
So Grid, you see a technical support level, but CIPHER sees a potential squeeze point. How do those interact?
Technically, 1.16511 is the immediate trap. If price breaks it, the lack of volume means it's likely a false move until the high-impact US data releases come out. But CIPHER is right that the positioning data is lagging the price action slightly. The market is respecting the downtrend, but the extreme leverage means any reversal will be violent.
Next, dollar yen. It is trading at 158.949, down 0.17%, holding near its 5-day high of 159.4925. CIPHER, what is the flow data telling us about the yen?
Leveraged funds are net short yen by 67,971 contracts. It is another heavily crowded short position. The flow data suggests that smart money is front-running a hawkish Jackson Hole outcome. The path of least resistance for breakout is upward, not further downside, because the short side is too crowded. We are seeing institutional bids supporting the dollar against the yen.
But you are ignoring the volatility regime. The VIX is at 15.85. If the Fed signals dovishness at Jackson Hole, that compressed volatility will break, and those 67,971 short yen contracts will face immediate liquidation pressure. The technical resistance at 159.4925 is just a trigger for that liquidation.
And technically, 158.3515 is the key support level below the current price. If we hold above that, the 159.4925 resistance is a liquidity trap. But given the low volume, we are likely to chop between those two levels until the data releases provide the necessary volume confirmation.
Finally, gold. Gold is trading at 4,642.88, down 0.26%, holding between its 5-day high of 4,697.2 and low of 4,508.86. CIPHER, you flagged a contradiction in the gold positioning earlier. Walk us through that.
Leveraged funds are net short gold by 670 contracts. That is strongly bearish positioning, yet the price is holding elevated at 4,642.88. This is a massive divergence. Price strength against bearish positioning usually signals that underlying fear is outpacing speculative conviction. We are seeing a disconnect that often precedes a short covering rally.
It is the safe haven bid. The flat yield curve at 0.47 percentage points and the sticky core PCE at 3.3% are driving capital into gold regardless of the leveraged positioning. The market is pricing in economic slowdown concerns, which supports gold even when the dollar is strong.
And that is the risk. The VIX is at 15.85. If the ISM data misses and the yield curve steepens, that 0.26% daily drop in gold could accelerate. The positioning is bearish, but the macro fear is bullish. We are in a volatility time bomb. A breakout above 4,697.2 would trigger the short cover CIPHER is talking about, but a breakdown below 4,508.86 would confirm the VIX expansion SPECTER mentioned.
Let's synthesize. We have a market where the fear and greed index is at 14 out of 100, but the US dollar index holds a net bullish position of 4,438 contracts. Pulse highlighted that the 1.1% durable goods beat and sticky 3.3% core PCE are creating a hawkish bias that supports the dollar. Grid mapped the tight 5-day ranges for euro-dollar and dollar-yen, showing that we are waiting for a volume-driven breakout. CIPHER confirmed that the extreme short positioning in euro, yen, and Canadian dollar creates a squeeze risk, while the bearish gold positioning is contradicting the price strength. SPECTER warned that the compressed VIX at 15.85 suggests a fragile setup where any data miss could trigger a violent reversal. To recap, the US dollar and gold are benefiting from a risk-off rotation driven by sticky inflation and Jackson Hole caution. Euro and yen are under pressure due to crowded short positioning and weak economic data. The key levels to watch are the 5-day extremes for euro-dollar and dollar-yen, as well as the 4,697.2 resistance for gold. Tomorrow, keep an eye on the weekly jobless claims. This has been the ShadowQuant Forex edition. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Forex Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.